Hey guys, welcome back to the channel. My name's Max. My channel's name is The Covered Collar. My little dog's name is Jackson. He's right here next to me. Hey Jackson, what are you doing? You want to come see us? Well, come here. What are you doing? Jax, you're the co-host. Oh, yes, sir. He's wishing me a happy birthday. It's my real birthday today. I've been celebrating for 3 or 4 days. But anyway, I had the guys over last night. We had some dinner. Anyway, all right, let's get this show on the road. Also, I was trying to start the live stream and I can't find the remote, and I looked for a second, so I'm sure you can hear the TV in the background. If it's annoying, I can do a new live stream, and let's just share the entire screen. Hopefully it's not too annoying. I don't mind it. It doesn't bother me. I'm used to being on all the time. I've been watching it since 6 this morning. Did you guys see Scott Bessent? He was on. He had a real good interview. They had a venture capitalist guy on that talked about AI a bunch. He was on there for like an hour, but then I saw Bessent. Anyway, good stuff. All right, I'm just glad the market is doing the right thing. All my stuff is green. Here's my model portfolio. Look at AMDY up 4.7%. I don't have that much of it, but I do indirectly. It's in GPTY, and it's in some other things I have. It's in triple QI. It's in GPTY. It's in YMAX, or AMD is, I should say. AMDY isn't in triple QI, but AMD is. Anyway, it's indirectly, it's in QLDY also, which is up 60 basis points, 0.6%. Anyway, okay, let's look at charts. Let's look at the charts. Well, that blocks isn't a bad place to start. It's up 72 basis points. The chart's not all that important, but let's start with the chart that is important. Let's look at maybe the SPY, the Qs, and maybe IBIT. All right, finally, we have a bullish gap left behind this morning. We have a bullish gap inside of a bearish gap. I'm still going to just leave the bearish gap up there. This big gap down is still controlling the story. This is what we're trying to invalidate, but this is good news that we left behind a bullish gap. I guess we should put the bullish gap in there too, because it could serve as later. So it's just one more thing to look at, I guess. We'll keep an eye on it. I still think that other gap's more important. We need to close on the other side of this today, which we probably will. Hopefully, close on our highs, and then whatever that was the other day, at least as far as the market is forgiven. Not that it can't start thinking about something else or whatever, but yeah, sorry. All right, let's look at the Qs. I was trying to look at the volume profile, but it's jacked up. It's not that big of a deal. All right, the Qs just have a huge tail on it, but they actually don't look like they've really gapped from yesterday's price. Is that right? Yeah. No, they haven't. It was impressive open yesterday morning. A lot of buyers. The buyers were definitely in this bullish gap again when they got there. That one definitely worked out. All right, that's the Qs. Let's look at IBIT. Gosh, look at all the gaps in this. We need to start following the gaps in this. All right, just as far as the reversion to mean, if you're trying to play that in this time frame, which is the time frame I look at, it looks like 66.90 is mean. And the bulls are trying to get it back there. We'll see. There's also a huge trading range we're in right down here between 64 and 65. Or anyway, we'll see. And actually, this one's actually down today. Trying to zoom in on it. It's actually down, and it's in the previous day's range. So that doesn't actually bode well for risk assets. Usually, the stock market's been going the same way as Bitcoin lately. But as far as all the other stuff we usually look at, I mean, S&P's up. S&P futures are up 0.5 point. SPY T's up. Russell's up 1.5. We never look at Russell. Let's look at Russell. These moving average things are making me mad because I don't even know why I put them on there. I should probably go back to the Bollinger Bands. Man, Russell breaking out, anticipating the easing rates and stuff, I guess. All right, so let's talk about the crypto quartet.
That's a great question. I think we have to acknowledge that these models, so you can't observe neutral, right? The neutral policy rate is the rate at which monetary policy is neither restricted.
All right, that's something else I'm working on. I'll show you guys that later. Let's look at the crypto quartet. Stock positions, LFGY. Let's see what these guys are doing today and how much everything's changed. Look, LFGY now has, is this LFGY? No way. Yeah, I guess it is LFGY. LFGY has ETHA in it. I hadn't noticed that, which is hurting him today. We'll look at the chart here in a second. Other than that, they have the usual suspects, HUT, Bitmine Immersion, Mara, those kinds of things, MicroStrategies. I hadn't noticed them owning Ethereum through that ETF in there. Maybe they have. I don't focus on this one too much. This is a good one. It's a good one. It's up 2.4 today. Wow. Look at this one. One of their stocks is up 25%. BitDeer. HUD 8 is up 10%. Wow. All right, let's look at, so what would you expect? This is the second most bullish one. So I'm going to say Blocks is probably up 3%, possibly. I don't know, but I wouldn't be surprised if Blocks is up 3%. I wouldn't be surprised if Alti's up maybe more like 1.5 or a point or something, just because it's a little more defensive. But let's look at the next one down the line, which is Alti. So these are Alti stock positions. Trying to see if I see anything new in here. I don't really. Let's look at the chart. Boy, look at this SMR. They were talking about, Kramer was talking about Bloom Energy and man, all these energy ones that are just insane. I'm trying to think. They were talking about another one. Well, they were talking about MP, materials processing, whatever that one is. All right. Well, anyway, it's SMR's day today. SMR's day today. We're going to need those small modular nuclear reactors to run AI, I guess. That's all they talk about on this channel. Anyway, so Alti's only up a point. So, but that's because of the way it's structured. It's more defensive. It's also generally being down less on the bad day. So, and a point's not bad, right? Let's go to, now what do we think about Blocks? Let's look at Blocks as stock positions. All right. Blocks, they don't change as often as the other ones. This is pretty much, they did add Taiwan Semi recently, I think. I think that may be the most recent one, but they don't seem to change them around quite as often as some of the other ones do. Unfortunately, Blocks is only up 72 bips today. Let's go see what's holding it back. And it's probably this ETHA's down. It's only down 1%, but heck, it's 10% of their fund. And then FBTC is down 1.5, and it's 15% of their fund. So they have 25% of their fund down more than 1%. That certainly, doesn't help. They do have the HUT long. And if they just have put spread sold and they own stock in HUT, so they have theoretically a lot of upside as a result of that. A lot of structural upside as a result of the lightning spread. Speaking of lightning spread, we're going to talk about it next, but let's go to Salty. We did not have a lightning spread report last night because I was hanging out with the guys, and I almost did one And I almost came on with a late night live stream. Then I ended up falling asleep. So, but I got up early this morning and I've been up and at them ever since. So, and then I thought about doing a morning live stream, and then I also was like, whatever. All right, let's look at stock positions at Salty. See if they've switched anything in and out. Adobe, A-Lab, APO, Bloom Energy, and I bet they don't like that one today, do they? Up 6.5%. Circle, GitLab, Lemonade. I don't really, just eyeballing it, I don't see anything new. And of course, Salty is down 2.7. Ooh, that's a big one, but they're on the wrong side of the bit. Oh, they're on the wrong side of this one also. All right, well, good news for Alti, bad news for Salty, good news for Alti. If you're doing the old 50-50, you'd be down because this is dropping at a bigger percent than Alti's going up. And that's, anyway, the 50-50 is not a good idea. And I'm sure people aren't doing that. But 80-20 is not the worst idea. And if you're 80-20, you're still up. You're still up right now. This is, you're up a point because of Alti, but you'd be down half a point because of this. So you'd be up about half a point, but be giving yourself some protection in a downside market. And I'll look at maybe 80-20, 85-15. That makes sense. But the bigger ones, I can't really get to work out. But anyway, do your own research on that one. All right, so let's go to lightning spread now. Now, this was the report that I don't know how the heck this happened. Somehow, well, anyway, I built the lightning spreadsheet as part of the crypto quartet. I guess I should put the lightning spread in and make it a crypto quintet. So lightning spread is based on Qs, but in the lightning, I don't know. But anyway, so what I've done is I've had some questions about the performance of the lightning spread lately, and I couldn't really answer them because I didn't have the data in front of me. I built kind of a terrible spreadsheet, worst spreadsheet in the history of America, just trying to track the lightning trades. It actually does an all right job tracking the trades and tracking the surplus of the dividends. But I had a viewer, maybe one of you guys, saying this thing doesn't seem to be performing. It's a lightning spread. Isn't it supposed to be uncapped on the upside? So it should at least be up about as much as the Qs because that's what its parent is. That's absolutely right. It should be. The put spreads do slow it down a little bit, but I mean, no, it should generally be up, right up there with the same, sometimes even a little bit more as the Qs. But I'm saying the put spreads can have some path dependency, and there's a few minor factors, but no, it should definitely be up. So I ran some numbers on it, and anyway, I didn't have time to make this for you guys. But look, I'll direct your attention to column K. So this is every day since the lightning spread and the Qs have been out. I measured the daily change. So on the first day, they were the same. On the second day, QLDY outperformed by 16 basis points. On the third day, they dropped, but the Qs dropped more. On the fourth day, the lightning spread beat it by 2 basis points. But we have had days where it inexplicably lost. Like on this day right here, it lost more than the Qs were down. The market was down 0.5%. The Qs are the market. And this was down 1%. It added, or more. So it added, almost 0.6% of downside. So that's not good. And in fact, that's more than all the extra upside I caught right there. So it is what it is, but I just hadn't been tracking this yet. But then we went on a 5-day streak of beating the market, which is what I would expect. I would expect a small beat or a small loss, but I wouldn't expect any big losses with the lightning spread, except maybe in a down market in a day. But in an up market, it ought to beat in an up market. So and maybe I need to do that too, color code for up markets versus down markets. But anyway, it does beat, but then we get back to a down market and it loses. I can handle losing on the down market. Here's the problem on line 15. So this was October 6th. That was Jackson's birthday. Jackson, you're 5. I can't believe Jackson's 5. Where's he at? Oh, okay, Jackson. I got you. I just want to know where you're at. But anyway, that was Jackson's birthday. But that day was not a good day. The market was up 75 basis points. This was only up 0.5%. I don't know why. Now, it could be the market makers and authorized participants try to keep the NAV close to it's close to efficient, but it could be off by a little bit. But anyway, then the next day it was tied, but then the next day we had another up day where so we had 2 up days where the lightning spread lost. I guess what I'm saying is those concern me more. Maybe I should put those in yellow. Up days where the lightning spread was behind. That's what we're definitely trying to avoid. Anyway, I can work on this later and maybe measure the cumulative difference and we can do some other things, but just on a day-by-day basis, it looks like it wins about 60% of the time. 40% of the time, it looks like it loses, but some of those losses, 9 basis points are tied. That's no big deal. I'm concerned about the bigger losses, like a quarter basis point, a 0.25% and a 1/3% and all that stuff. That's and a 0.5%. That's not good either. Although that was on a down day, so that's excusable because of the structure of the lightning spreads. So I see 2 days that are problem. Let's put those in yellow and we'll keep an eye on them. And I'll work on this. I'll work on making this better. But anyway, so that's what I got up this morning and worked on that for a little while. Let's look at the actual trades. I'll try to make this better as well. But it'll take just a second to come up. We have new max factor numbers too. If you guys want to look at those, we'll definitely look at those. So on the worksheet here, this is the sheet I'm not really that happy with. But we got a lot of premium yesterday. I'll direct your attention right here where my mouse is. This 147.73. That's how much we sold our options for. The day before we sold options for 64. That's because of IV. That's because the market pulled way back. But anyway, so that was actually, now that I'm thinking about it, that was 2 days ago's trade because I had dinner with the guys last night. I forgot to update the spreadsheet. I did update the daily changes. That last thing I showed you is right up to the second. This though, anyway, so sorry about that, but no one, who cares? What is kind of interesting on this is I keep track at Column is just how much their premium they're selling every day. And you can see it goes anywhere from as high as 49 to as low as, 31. And it looks like it averages 36, and that's about what it's paying right now over here. And column O is the dividend. And they declared a 19-cent dividend, I think this morning. Well, it was yesterday. They paid it. Anyway, I get it so mixed up. But they have 30 cents in reserve, but they'll do another couple of days. They'll build the reserve up to 40 cents, 50 cents, then they'll pay again. And that another 20 cents will come out or 19 or whatever they're paying. And then it'll go back down. But it looks like their reserve is easily, it looks like they can maybe even up the payment a little. And I wonder if they might, because after that one big day they had 2 days ago, even though it was a big day as far as numbers go, and the option they had to buy for protection cost more also. And that's the one thing about spreads. When you do spreads, spreads mitigate some of the theta, and that's a good thing when you're buying a spread. But it can help. But it also means spreads move slower. Spreads have different dynamics because you're buying something and selling something, so it tends to negate a lot of the Greeks and make it more just kind of like a coin toss or closer to a coin toss. Anyway, but a spread's a smart way to do this because they don't want to subject themselves to unlimited loss. In fact, they can't afford to because they own the shares, and the shares are already subjected to unlimited loss. So if they didn't spread this off, they'd be a double leverage fund. It'd be a 2x fund, which but so anyway, and that's not the idea. So they don't want to use leverage, but that's why I always say they do use. This is leverage between these two strikes, between 24,590 on the NDX and 24,740. They're double long. Their slope is double the slope of just the stock. Just the stock is so it's because they're double exposure. If it goes through it the wrong way, they're double short. I mean, it cost them twice. So anyway, that's just kind of the nature of the lightning spread. But I feel better now that we had that other sheet that I showed you that is where we're tracking the actual daily change. I'm also going to track the cumulative change. Right now, the Qs are a little bit ahead on the cumulative change. That was something else that was kind of bugging me, but I was more bugged by the daily change problem. But I don't think it's as big as I thought, at least if I did the math right. I thought they were getting beat pretty much on the daily, but it doesn't look like that's the case. So anyway, I'm going to make a video about QLDY. What are you guys doing? What's going on? 14 of you guys here. I appreciate you guys. James Owen, thank you. Thank you. Yeah, the crypto quintet. I guess I'm just going to have to put Killed on there. Killed's going to be crypto. There's no way you're going to have a high yield fund. Anything high yield is, well, crypto AI, it's all the same. I mean, crypto AI, data center, even the ones that are energy stocks are blowing up because they're energy for AI type situations. Hey, Summit. Yes, thank you, Summit. I certainly appreciate the birthday wishes. I've been talking about it for about a week because I wanted to start early with OU Texas, and I did. I had a great weekend, and you know, I had a great weekend and didn't do much influencing, but watched the ball game, and it was a good time. Trying to relax and stuff, but except for the fact that my team lost, you know, so that was no good. Hey, thank you, Mike, or thank you so much, and thank you so much, Taz, out there in Baltimore, Tasman and Baltimore. And you're surprised with your Misty payment. What was the Misty payment? I mean, you know me, I have Misty, but it's on full drip, and it's actually like 4% of my bottle portfolio because I didn't want to, or 3%, because I'm ride or die. I thought I sold all of it, but I didn't have my glasses on, and so I'm ride or die. I'm in Misty for life, Misty Mafia, baby. I mean, I figure why not? I think it's like 2 or 3%, but I meant for it to be less than 1%. So anyway, WPay is proving its worth. Well, you know that. Did you guys, that Roger Sands show is interesting that you guys told me to watch. He was a little bit critical of WPay. Are you guys not worried about what he said? He looks like, I like the guy a lot. He's obviously data driven. You know, he has the spreadsheets, lines it up and shows you, just like I tried to show you on QLDY and triple Qs right now. So, but I'm not worried about it, but it wasn't the most flattering portrait of it. Right. But anyway, I'm glad you're happy with the Marcus. I don't care what Roger Sands says. I care what Marcus says. I follow Marcus. Marcus, a lot of you guys should have your own YouTube channels. You guys all have better ideas than I do. Okay, the BITK video, I know I promised that would be next. And I think you were in my comment section, and I think you were because I recognize your name. I'm trying to make one video a day. And yesterday it was, and I know that doesn't sound hard, one video in addition to the 3 live streams I do a day. My one video yesterday was on blocks, and it was just a 10-minute video, but I want to do the same thing, 10, 50-minute, no big deal, you know, a nice organized video, not live, pre-recorded, and I'm going to do it on BITK. It may take like 20 minutes though, because I really want to do one on Tuttle Capital, because they've released like a prospectus where they're coming out with probably 20 new funds, and they're called Income Blast, and they look awesome. They look like mostly lightning spread funds, and they look like they're maybe trying to compete with Granite shares. I don't remember, some of them maybe were leveraged, but man, they're super interesting. So a video on BITK would be quick, but I might also probably cover Tuttle Capital, who are they, and that kind of stuff, because I signed up for the guy's newsletter, and I really like, his name's Matthew Tuttle. I've been reading his newsletter. He's an option bro. He's really smart. I'm going to get him on the show soon also, but I'll get the BITK video out there. We can go look at it really quick. Let's just check in on it. Then we'll go over to the daily buffer, but BITK is not on there. It probably should be. We're going to put it on there as a matter of fact, but let's just do that. Let's just, open this window. And I actually closed a lot of windows before I was on live. There was twice as many open. Just going to hit restore, which is dangerous sometimes. But I haven't even stopped in and said, hey, in Discord yet. Let me make sure I don't have any messages in there. Come on, what's it doing? Oh, I may be locked out again. No, I'm not. No messages. All right. That's cool. All right, so let's look at the index buffer report, and what we're going to do is let's put BITK in there. So who should BITK's underline be? I'm going to say IBIT, or right? It's IBIT's underline, or maybe even, now let's put it next to something we like to compare it to. So BITK should compare to I don't really have much crypto stuff on here. I don't even follow YBTC and stuff. I don't know why I never really thought about that. I don't have a crypto underlying section. I have SPY, Qs. I'm such an index guy. Okay, we'll just put it with the Qs. We'll just put it right there next to Salty. Or we'll put it here next to, between SEPI and GPTY and stuff like that. Let me insert a row below. I kind of like having the volume on because I can hear if anything's happening, but I thought it might bother you guys. It doesn't bother me. So the IBIT. IBIT is going to be its underline. Let's hit return. And when we go back to the sheet, it should be, well, maybe not. Okay, there we go. It's up 5% today. You got to be kidding me. And IBIT's down. Heck yes. Heck yes. Why don't I have some of this stuff? All right, so let's look at the index buffer report. There it is, up 5%. I'm going to start having to think of something new to say. It's good. It's probably going to be the one that's going to be the up the most or the down the most. It's behaving like it so far. Well, that's really impressive. All right, so let's see what else is doing well. LFGY, which I'm all the way out of, like a dummy, but that's fine. That's fine. But every time it goes up, I'm like, why did I get all the way out? But it was underperforming the other ones. It was underperforming bad. But maybe right now it's reverting to mean. Oh, my gosh. Well, YMAX looks good today. It's a good-looking one. GPTY is if you want a blue-chip high-yield fund and you want a yield chase, I'd say GPTY or FEPI. The GPTY pays more yield. FEPI's another blue-chip fund. SEPI, something like that. Well, FEPI probably. But then if you want a blue chip fund that's going to and you don't need as much yield, I would go big Y, BIGY. But that's going to have AMDY, Google. It's going to have FANG plus everything that the big things, Broadcom, the big boys, big tech. Anyway, FEET and 5ER. FEET is up more than the rest of the S&P, and that is usually what I say. FEET usually leads or FEET and 5 usually lead or not the S&P. Salty, come on, Salty, down 2. What are you guys doing? It's that darn Bloom Energy short, right? I mean, it's not working out for him. All right, and look at YQQQ. That's what I'm using for a hedge. I've been threatening to get Salty, but I feel good about YQQQ today because I'm using this as a hedge instead of that as a hedge, and this is hedging better because it's not down as much. It also covers the NASDAQ, which covers a lot of the stocks that are in Salty. Now, the counter to that argument is wait till the market drops and then it's going to look the same way. But Salty's going to be up 4% and this one's going to be up like 0.5% or something. And I get that. That's why I probably need to sprinkle in a little Salty. All right. So what do we want to talk about? You just want to look at the max factor? We got new ratings last night, and then I'll take questions or comments, or let's stop by the question and comment center. Yeah, Taz, no problem. If I don't do it, it's because maybe, I may get lazy, but it'll be tomorrow. It'll be the next video I do. But I'll try to get it done today. Okay, yeah, I'll answer those questions. Okay, we'll look at those. Let's go to the max factor. Let's pull up the max factor and maybe stock tools and do some analysis here. But I'm glad I finally feel like I got a handle on QLDY and the daily change situation. We'll start tracking that, and if it does, if it's a problem, I'm going to stop talking about it, and I won't like it as much. But I feel bad that I'm so in love with the strategy, and I feel some of you guys probably got it, and but you also have blocks, which has it too. And if it's not doing what I say, I need to figure it out and stop saying it, or and figure out what it is doing. So I'll stay on top of it. For sure. And of course, you guys understand it's not financial advice and stuff, but still it sucks. And I still, even though it's not financial advice, I'm trying to be accurate. Just like if I was telling my brother-in-law or something, hey, I really like this stock, I would really mean I really like this stock. It doesn't mean that I'm always right, unfortunately, but I'm always in good faith. All right. So, I think I already have the max factor loaded. Let me see here. Yeah, I do. Okay. I thought it was kind of cool just going by since inception date, the top 100, all ETFs. It's just cool to look how I was doing this morning because I got up like at 6:30. It's just marvelous how, you could see kind of the evolution of covered calls and stuff. I mean, or of income strategies. I mean, back in the day, CLM's always been a great one, and SCHD's always been one that people have used. And it's SCHD. What's good about it is it doesn't give you much yield, but it tries to give you more upside. Lately, it hasn't been doing the best job the past year or something, but I mean, over the course of time, it's done a good job. And then Gold Eye was an option as far back as 2013, and that's paying 14% now. Silvo's been around since 2013. Now, this is one of the oldest covered call funds, First Trust. And of course, one thing is QLDY and XYLD and all those were really around since 2013. I think they had a prospectus change, and for some reason, my data people think that they've only been around since 2018, but it's not that big of a deal. But anyway, then you have QILD, XYLD, and you can see as time goes by, you have more opportunities for yield. Gold Eye was 14, but then this USOI, boy, that one's based on oil, but I think that one did a 10-for-1 reverse split whenever oil went negative. But anyway, that happens. But anyway, then Devo's been around since 2018. Only pays 5%, but I bet it's like SCHD. I bet it gives a lot of the return back in the form of capital appreciation, or it tries to anyway. Remember, I'm always talking about YYY. We do have some closed-end funds in here. We have CEFS. And the other one I need to put in there is CCEF. I've heard that's a really good one. And I don't want to be a closed-end fund guy because I don't really understand the mechanics and stuff, but I want to put the big ones in there and the good ones in there so we have a baseline to compare our other stuff to. But anyway, who cares about that? Let's see who's doing great now. I do like to look at the history of covered. Maybe I need to do a video like that someday and go back through the history of covered calls or something. Sounds like a video that probably get about 100 views. Anyway, all right. Look at this high gold, 15% yield, up 15% on the quarter. I wonder if we can. We can't drag columns. Let's look at the long-term max factors. Okay, I know there's a lot of Palti fans out there. Palti, TSLP, TSLY, great fun. Snowy, GDXY. I'm so glad I have GDXY. Gold's at 4,200 this morning. Goop and Gooey. Those have been great because you're getting your yield and you're getting your, NAV, but, we've been in a huge bull market, so take it for what it's worth. But those have been great. All of these, you don't get on the top 10 list by being great. I should make a top 20 worst list also. But anyway, all right. And then lately I've been looking at this metric, and I really like this metric. This is called the outlier metric, but it shows you which one of these stock moves have been more of an outlier. I think we'd all agree the gold move has been an outlier. Or you could call this the momentum. This is the momentum, whatever. I need to work on the branding, but this definitely measures, momentum or whatever. But anyway, iGold and then Palti. Palti, even though Palti's a 46 fall, we'd expect it to be up 46% or down 46% in a year, and that's a decent year, and you can't be mad, even if it's down 46%. Going in, if it has that kind of IV, that's what it's capable of doing. But it's up 124%, so that's better than your wildest expectations. You might expect maybe 1.5 times, maybe 2 times the standard deviation, but that's like that's a big difference. SLVO's having its moment. CLM, look at CLM. It's the same thing as that iGold on or same thing as Palti on a smaller scale, because it's only a 12 vol. It has the SPY's volatility, yet it's up 27% year to date total return. So not out of the realm of possibilities, but you would definitely say, yeah, you're having a great year, CLN. So these are all the ones. These are all the ones that are having a great year. Another person could look at this and say, these are too high. These are sells. And this is just a quantitative metric, not a qualitative, just like all of them. I can't predict the future. But there's some pretty good looking funds on here. Look at KQQQ. Now it's a little bit more volatile than this, a little bit more volatile because Howard uses tech stocks and stuff, but he also uses options. So it's not just insanely volatile. And I mean, that one's up 21% total return year to date. I mean, look, all of these are up good. The lowest one that's on this list is up 6% year to date, but heck, it's a bond fund. Even the bond funds are outperforming, outperforming expectations or however you want to look at it. But yeah, that's the momentum ratio. So we looked at short term, we looked at long term. I looked at short term kind of fast. We'll go down here, see if your favorite ones are on here. Gooey Goop, K Gold, SLVO. These numbers update every day. So K Gold's now paying a 9.9, but it takes every time it pays a new dividend, it projects it over a year and figures out. So these can change as dividends go up and down. Silvo, Gold Eye, Tesla, TLTW's on here. That kind of, how did this one get on here? There's probably a math error or something because this is let's go look at TLTW. Maybe TLT. I was actually kind of surprised because I had some TLTW as a hedge. And when I sold it, I never really thought much about it. But when I sold it, I noticed that including the drip, I'd actually done pretty well in it somehow. It wasn't a big position, but the model portfolio had done pretty well. And it was kind of surprised me, but so let's just compare it to, I guess, TLT. This is bond fund, bond based. I mean, it's beating its parent pretty well, and that's over a 3-year time frame. I've never really noticed this fund. I've never really noticed this fund. Now, the parent TLT, because it's based on 20-year bonds, it also pays a decent dividend. Over 3 years, it's paid $10 on a $112 asset. It pays I think it pays what the 20-year pays approximately. And so that varies. It goes up and down. But TLTW is managing to put together better total return and returning a good deal of this thing. Returning about half about a third of the principal over 3 years in the form of distributions, and the total returns outperforming the parent. Anyway, so I guess that one maybe does have some value to some people. Now let's see which one's doing better, TLTW or TLTI. Different funds. Now TLTI is that from? I just heard somebody had a TLTI out. I don't even know who it's from. But it's a competitor, but it's not doing as well as TLTW. You guys probably know who TLTI is from, probably iShares or something. But let me catch up with the comments so I don't get too out of control. Hey, Mark's here. Thank you, Mark, and thank you for the birthday wishes. Appreciate you. AMDW. So did you guys see what Roger Sand said yesterday? Did you see what he showed? Forget about the WPay. What I was more worried about, he showed in the video where AMDW was only up 5% or something on the day AMDY was up 20, or not AMDY, on the day that AMD was up like 20. I don't know what AMDY was up. I bet it was up more than 5. It was up like a 17, or it was up caught most of the upside. And remember, and the only problem with that, I'm not a round hill hater. They've done a lot of great things and stuff. But that, they're kind of advertising themselves, or maybe they aren't really saying this. Influencers are saying they don't sell options, so if they have uncapped upside. Well, and I've always said they do sell options synthetically because their counterparty selling options to pay you the payment. And so sure enough, I think I was right. I think that might be a good video. I'm going to make that video as soon as I make the VITK video. That's the video I really want to make. I'm going to check it and make sure that's right. I'm going to check Roger's math. But I'm gonna look at a few other ones and some big moves and see if they underperformed also. But it would make total sense because there's no free money. You can't give everyone the same upside as the market and pay a 20% yield. I'm going to give you the same total returns as the market. I'm going to give you a 20% yield. I mean, because they're doing it with the swap with the counterparty. No counterparty is going to do that. the counterparty is going to say you're smoking crack, buddy. I mean, no, you don't get the same upside as the market, and so anyway, the thing is the market makers always know. And so even though Roundhill won't tell us what they're doing, and we've been trying to figure it out, I've even tweeted at them and got no response, something to the same extent. With the public market, the markets are efficient, and the market's telling you, the market makers and the market's telling you what they're doing, because you can tell by the move. And really, it looked to me like, and I'm not trying to be critical, but I mean, well, I need to do a comparison between AMDW and AMDY and see over time how they've done. All right, Redfish, what are you talking about? You're talking about mistakes. You sold all your CLM. Oh, I'm sorry, man. Misty saved you. Yeah, I mean, a lot of those, if you'd, a lot of the yield max ones have done well. You can always buy back in. CLM's, they're all good. I mean, maybe next time, maybe go one third cornerstone, 1/3 yield max. Yield max has a place, and 1/3 Roundhill, or 1/3 Rex, or maybe 1/4 Rex, 1/4. Put a little bit in it, because they act a little bit different. Some of them do better on different days. I mean, I'm not in the Roundhill ones have been doing great. I know people love WPay. I just want to see there's a hidden cost we're paying. All right, SPTU is State Street's new answer to SGov. Oh, interesting. Okay, Jameson, for a little cash management situation, it's good to have those in the back pocket. All right, what else? Let's look at stock tools. Let's look at stock tools and see what's going on over there. Who has earnings today? Do you guys want to? I wonder if stock tools has an earnings. Sign in. I am signed in. Come on.
There is some broader concern as to whether First Brands and Tricolor, those are two auto bankruptcies, are basically the canary in the coal mine, and whether there could be swarming across the system. I know you did actually take provisions down during the quarter, so you obviously feel pretty good about your own book. But I'm curious.
I want to get back into some earnings trades, but the good ones are going to be really in 2 weeks. We might look at something for next week, maybe something that might run into earnings. So this is stocktools.app. If you guys don't know, my affiliate code is stocktools.app/max, and you can try it out. No credit card, no nothing. It's absolutely incredible. It's so incredible. I can't even keep up with. We need to look at it first thing every morning. Best performing sector is real estate. You guys have been bugging me forever. Not really bugging me, but asking me, hey, is there a real estate one? Or you guys have been bugging the managers. Hey, you guys need to come out with real estate base. Anyway, good call, obviously. But yeah, here we have it. So that's the spider sector performance. Real estate's up. Of course, tech's up, XLK. I wonder how that XLKI is doing. Do you remember that one? It's the State Street Income Fund. Anyway, well, it's not 3 months old yet, but it'll be on the thing soon, on the max factor, as soon as it turns 3 months old. Utilities look good. Yeah, but this is incredible. Sector performance heat map. Let's look at. Oh, I see. This is the heat map. Okay, so I always go to dividend income ETF analysis, and let's just select a group as yield max. Let's make that go away, and then let's select. It should be select all.
Outside the banking system, so that's a different question.
Yeah, so that was my follow-up question there, was whether you think there is more culpability or more risk, I should say, within the non-bank financial institution area, and whether you see any risk.
It's because I was yesterday, look at this. Well, this is interesting too. I was comparing blocks to LFGY. This is cool too. I mean, this is a great feature. Blocks to LFGY, blocks to ALTI, blocks to CEPI. You know how we always go to that dividend calculator? Rob's built that in. The programmer of this beautiful app has built that in, where it has all the same stuff here. It shows you the total return, dividends reinvested, dividends not reinvested, the whole bit, just like that does. So I never have to go there anymore. But blocks and LFTY, we were just talking about this morning. Here's the annual dividend income. You can switch the amount and see, how much you would. This is an income, a dividend, a drip calculator or whatever. So you starting shares, ending shares, the whole bit, how much growth you have. Dividend data is interesting as well. It shows you the yields. You have the yield of block. It calls a block in here for some reason. I'm sure Rob's listening and he'll fix that. I noticed that the other day. It's not block. But it's talking about blocks, but it's labeled block for some reason. There is a fund out there called Block that actually is one of Mike Venuto's funds, or he was telling a story about Block the other day, and it's been around for. It's a crypto fund or something that was one of the first crypto ETFs to come out or something like that. But it doesn't pay 41%. This is a different fund. This is I think it's a typo. I hope it is because I used this in some content yesterday. But anyway, and then right down here is blocks, and so here it's right. Maybe it is comparing block. But anyway, here's blocks and SEPI. This is for sure blocks and SEPI. I think the other one is right too. But gosh darn it, let me look. I'm going to check it with another piece of software, even though we don't use this anymore. I don't have to. Let's just check to see if it is paying that kind of yield. Yeah, I guess it's saying I was right. I had some details right. It has been around since 2018. Why don't we ever talk about this fund? Is it really paying that kind of yield? Holy cow. I mean, okay. Let's just go back to the past year. Maybe I need to do some content on this. But let me go back to the past year here. You know what happened a year ago today? A year ago today, the new Alti was born. I believe the prospectus changes went into effect that let them do anything. But basically, they switched to callers. But why don't I ever talk about Block? I mean, it's crypto. It's like, hang on a second. Let's go to Finviz and look at it really quick. I'll come back to that blocks comparison, but this is why I use software, because I see stuff. It's an Amplify fund. Okay, transformational share. But I swear, Mike Venuto has something. He was talking about this. He helped them build this or whatever. Amplify used titles, infrastructure, or whatever. And was this the one he was saying this is basically like a hedge fund? And they do, or no, that was something else. Anyway, but whatever, they've had some, the 3-year performance, 300%, 1-year total return, 96%. How many assets under management these guys have? 1.5 billion. I'm sure you guys know about it. I just never talk about this. I guess the reason is it's only a 3% yielder. It doesn't technically qualify to be on the max factor, but I'm thinking maybe we should put it on there. But I don't know. I'm torn between it. Anyway, okay, back to the. Sorry to go off on a tangent there about Block. Block's a good one. But anyway, blocks for SEPI. I'm trying to stay on the blocks for SEPI. So here's just the NAV, and of course we know on the NAV, on just NAV, blocks wins. Here's on total return, of course, and here you can put in the SPY for a benchmark, just like you always do on that other one. Hey guys, sorry about that. My bad. No, no, I was, no, he came unplugged and I didn't notice it. I thought he was trying to force an update or something. This keeps asking me for an update, and I keep saying do tonight. I'll reschedule for tonight. And then I thought maybe because it said hibernating, and I didn't put two and together that it was the cord. Anyway, okay, so let me get back to where I was. I was just extolling the virtues of StockTools.app. It's absolutely incredible. So let's go back to what we're looking at. Okay, here we are. Oh, we were just showing the okay, well now now everything's back up. Okay, so let's check this out. So let's forget about blocks for a second. We can look at the same measure. This is basically the buffer report. This right here's, let me see, is this every stock? Yeah, select all. Okay, so this is every stock, and this is their performance for the past. This is every stock, and this is their performance for the past day. So Soxy's up the most right now. Block. So Block is part of his. Block is in Rob's. I mean, this is the real Block, of course. So Rob is smart enough to have blocks in his stuff, but not me. Well, anyway, it doesn't qualify to be on mine, but anything of any yield qualifies to be on Rob's. So maybe I should start doing mine that way also. But you can see here comparing. You can compare block to. Well, it's because I put these comparisons in here. So anyway, all right. But 5E's having a great day. I always rag on 5E, and it's even beating the SPY feed GPTY. Having a great day. GPTY beating the SPY. But it's more interesting to go and look at maybe a week or something, I think. Let's look at the past week and see what's going on. And I guess that block is showing up because I put it in there with this. All right. It's not have anything to do with Rob. It was because I made a comparison. All right. So look at this thing. I know the real estate guys, we just were looking at the real estate, the heat map, and real estate was killing it. And sure enough, Renty is beating his parent asset, VNQ, pretty badly, and yielding, about 50% based on its latest dividend. I mean, look at number 2, old LFGY and SPY. So let's drill down on LFGY and SPY. This is let's go into this dividend. This thing amazes me. This is the best feature here. So here is, now this is the 1 week return. It's just 1 week. Your battery's run low. Now, come on, let me make sure it's plugged in on the other end. Yeah, it is. It may be that it's too low. I don't know if it's going to be able to continue. If it dies, I'll talk to you guys later. It may just be because it's a 4K monitor, and I ran it all the way dead. I probably should have. Anyway, whatever. Check this out. So this is the total return, but we can just measure the NAV return, which is a hot mess, and then add in the SPY for the benchmark, which I like to do. And you see here that LFGY cash reinvested doesn't matter. It's dominating. But this is just handy as can be. And then, of course, you don't really care about the dividend that the SPY pays, right? But so the comparison isn't much. Or on dividend data, it'll show you the comparison. I guess it is interesting. The SPY does pay something, but LFGY yield, the SPY pays 1.1. It'll probably shut me off here in a second, I'm thinking. So anyway, I didn't really have anything to talk about, anything more to talk about anyway. I need to get busy on that video. I'll see what you guys are doing. But you see me now, right? Yeah. Jackson chewed the cord probably. By the way, okay, what are you saying, Redfish? You're just going to keep your YMAX and just add the WPay? Yeah. I mean, I can make a case for both of them. I mean, YieldMax does some really cool stuff as far as with yield goes, and all that yield makes for some better downside. WPay does some cool stuff also, that a little bit more on the because of the leverage, they catch a little bit more upside. So yeah, absolutely. All right, guys, I'm going to get out of here. I think my computer's about to die. Thank you guys so much for being here, and I'll go work on that video. Be looking for the video, and I'll be back on later. All right, I'll see you.
1%, that's the strength of China and the recovery in